Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today's stock market education, we're going to focus all on, has the stock market topped out? Are we ready to head into a bear market? And is that beautiful 6-week rally to the upside that was led by tech stocks and led by Apple, is that move over? If it is over, now we need to get a little bit more stock specific on the best stocks to buy now. And we're going to throw a little curveball today. We're actually going to look at short selling a couple of stocks, which means betting on the move to the downside. Now, a lot of you might know how to do that using put options, but today we're going to talk about straight up shorting two individual stocks. We have the top 5 stocks that I'm looking for to trade this week, which is the week of August 29th, 2022. So we got a lot to cover today. We're going to dig a little bit into sector rotation. We're going to look at which sectors are strong and which groups of stocks should be in focus right now. And the other side of the stock market, which stocks are weak right now, and which stocks I am personally going to be looking as short sale opportunities this week. So buckle up. We have a lot to talk about today. So thank you so much for joining me. Stick around. I'll be back in just 1 second. Okay, so obviously the big thing we need to talk about is Jerome Powell from last week, right? Can't get around that. Last week's sharp sell-off. Yeah, I would say it's a sharp sell-off. The Dow was down 1,000 points at one point. And I think this is really the big part of what everybody is focusing on right now, was the level of clarity that Jerome Powell spoke about. A lot of times the stock market does not like lack of clarity. Lack of clarity is indecision, and it's tough to make trades or investments when you're not 100% sure of what you believe is going to be the outcome, right? Well, Jerome Powell didn't hold back last week, and the stock market did not like what he talked about. We actually talked about it on our live stream last week, that we said 10 o'clock, look for a market sell-off. He gave a very clear indication of nothing new, quite honestly. That's the part that's shocking me the most out of all the people that we've been speaking to, is what did he say? What did he say? He didn't say anything different at all. He said that they're trying to get inflation down. 2% is in that area. Right now, it's up around between 8 and 9, depending on how you're reading the number. And what they need to do, they need to keep raising interest rates. It was almost a lock about 2 or 3 weeks ago that the interest rates were going to be a half basis points increase. Now, I'm not so sure about that, because I think we're starting to feel inflation just a little bit more. I know I am where I live down here in Florida. Everything's going through the roof right now, including insurance. So anyway, we're going to take a deep dive first into sector rotation, and then we're going to dive straight into those stocks. Actually, you know what? Let's go straight to sector rotation, but I want to go right into the top 5 stocks that I'm looking at right now. And I'd love to hear what stocks you're thinking about trading today. So I want to say, hey, Glenn, how's it going today? Lewis, my pal, Don, good morning. John Bates, as always. So first thing we want to do, obviously, we're going to talk about Jerome Powell and that effect that it had on the market. Now, this is the big thing right here. Summer stock market rally fizzles, right? And if you remember last week, the single biggest thing that we talked about last week is understanding the trade objective you have when you choose to buy stocks or sell stocks. First, you need to know if it's obvious, and then you need to know, is it still valid? That second part is where a lot of people are having problems right now, because we got this beautiful gift of a 5-week rally. And if you happen to be new to the stock market, I want to point that out to you, what that actually looked like. We're going to hop over here on the weekly charts. This beautiful, beautiful price action that we had here. Right here is when we should have gone down, and we didn't. And we had 1, 2, 3, 4, 5, 6, basically 5.5 weeks of buying. Now, what's kind of interesting is people always want trading to be more complicated than it actually needs to be. You can actually see that we actually had a really beautiful bearish U-turn right at resistance on the weekly chart. Now, this is a really big thing to get across here right now. There's 2 things to know. Number one is the market has absolutely changed its behavior. That vicious, glorious, beautiful buying pressure that we saw to the upside has definitely slowed down, if not completely reversed. Now, what that means for you personally, and again, these are all for educational purposes. I'm just telling you how I'd be speaking to members of my trading flow when they were trading my money, is you actually have to now know what is your objective, and in that time frame, is the order flow still valid? Now, this is the problem that we had. And I'm actually going to show you a screen right now of the size of the list and how it's expanding. So you probably want to take a quick screenshot of this, because this is what we do every day. I give this list to everybody every day in our boot camp. At night, I create the list. I do my 2 hours worth of game planning. I post it, and then I do a follow-up video. So I'm going to kind of give you a little bit of a sneak peek on this right now. So when we're working through the list, we obviously have sector rotation, and we all know that energy right now, and if you remember last week, we were talking about basic materials, pretty strong. The other side of the market, communication services, which includes Meta and those guys, and technology are now on the bottom of the list. Now, one of the smartest things that you can do is make your stock market decisions as easy as possible. There's no reason to predict. There's no reason to guess. There's no reason to forecast. The difference between predicting and probability is it's already doing that, and we're expecting it to continue. Predicting is it's not doing it yet, and you're looking for it to reverse and do what you expect. And that's a big problem with many people who are super smart, but have a problem with the market where they're first looking at a spot to get in, and then they hope the market does what they want them to do. Make it 50 times easier and say it's already doing it. Now let's just hop on board and find a spot where risk reward makes sense. Now here's where it gets interesting. And I want you to screenshot this because this is what I give to everybody every night. As we start to work our way across the board, you can see this paragraph here. Let me get myself off the screen there. Stacked order flow. So all of this is what we get every single night. So stacked order flow, to give you some context right now, stacked order flow means that there's buying pressure over time. So we have long-term buying pressure and short-term buying pressure. So actively it's being bought right now. And over time, smart money was spending money to push it up over the last 5 days, over the last month. This list that I just showed you in the most recent price action and during this rally here, this list had roughly anywhere from 25 to 60 stocks that met this criteria. Now, heading into today, heading into Monday, the sector rotation is showing you that there's a lot more red on the screen from Friday and specifically over the last 5 days, which is why the list of stocks with stacked order flow has decreased dramatically. So what does that mean for you as a participant in the stock market, a speculator, right? You need to know what are the odds of something following through and hitting your profit target versus your stop loss. And that also is going to imply what's the right share size for your initial entry on that trade. Is everything beautifully lining up? It's perfect. The birds are singing in the background. You hit enter and it doesn't matter what you do, the stock's going to go up. Or are we in the kind of market right now where clearly the market has reversed and we're seeing big, heavier moves in the other direction? You can see how much the futures are down right now. So let's be clear about this. Stock market sector rotation is absolutely telling us that the picture has changed. Look at all of that red on the screen and look at what it looked like for the entire week. So I'm going to tell you what that means for me. I am now trading both sides of the market. During that big 5-week move to the upside, it was easier to buy stocks because that was where the dominant side of the market was. Now I'm going to be looking at both sides. I'm looking to buy stocks, sell short stocks, and even hedge some positions with short sales. So what I want to do now is I want to get into the bigger list of stocks that I'm looking for this week. So as promised, these are the top 5 stocks that I'm going to be looking at from Monday through Friday of this week. So I want to be clear. This is not a day trade, Monday through Friday. That's the trade that I'm looking for on these 5 opportunities. 3 of them are stocks to buy. 2 of them are stocks that are short sale opportunities. So I'm actually looking for them to continue going down. Now, what's interesting about 2 of these is 2 of the buying opportunities, they're actually up here, and I want to buy them down here. So a couple of them are right at levels that I like. A couple of them are at levels where they need to get down to the price that I want to pay, or I'm not going to get involved. So we're actually going to take a look at those stocks right now. Okay. So the first stock in the list on the buy side of the market, and we're actually going to go over here to the daily chart, is EQT. EQT, you can see here, let me actually pull this out just to give you some context of where it is. It's been struggling with this $50 level, but you can see it's really not down that much this morning with the market. So there's actually 50 to 60 is the first profit target here. So let's map this out right now. And I'm going to go back over to the daily chart, and you can clearly see where this thing has to go. And we're talking about this resistance level is all the way back here in 2014, which is another big question that we get. How recent does buying or selling support or resistance need to be for it to be significant? Well, in this particular case, there's really no major resistance level. Sellers didn't do anything in a big way all the way back until 2014. So either way, it looks like I have a $10 profit target, $10 initial profit target on this trade. So I'm going to zoom this out a little bit more, and we want to see what it's doing right now. So within this window of this $10 target, that means that I'm looking to make at least 3 to 1 on that $10 target. So if I know I'm looking to make 10, I'm looking to enter around 50. 50 to 60 is 10. So I don't want to risk more than $3 to $3.33 on this trade. So now what's beautiful about this is the trade is completely mapped out. Now, the challenge that a lot of people have when they're buying breakouts, and we joke around about this sometimes in our community, that for some reason breakouts get all this bad publicity, that one didn't follow through, that one didn't follow through. We could probably say that about a lot of our ideas. You don't need every one of them to follow through. I want to be clear about this, and a lot of people have doubts about this, but it is 100%, in my opinion, fact. Once you understand how to manage the downside in your trades, which is what we just talked about, right? Breaks out, great. If it doesn't break out, we know we're going to have that $3.30 risk from the entry. And if it pulls back, we're fine. That's a business expense. It's a part of trading. Remember, real breakouts follow through. If it breaks out and keeps going and hits that 60, great. That's our initial profit target. Then we'll shift over into one of our trailing stop loss methods to see if there's a little bit more to go on that. Now, what I just said are actually the keys to the kingdom. Once you are good at managing risk, once you're good at saying, you know what, that thing goes down to my stop loss, I'm out of there, I'm going to preserve my capital, I'm going to go look for my next trade. Once you're good at that, the real skill in watching your account grow day after day, week after week, let's say month after month, right, is learning how to hold and manage the good positions. Now, sometimes that means more aggressive initial entries and you add later. Sometimes that means you have a smaller piece and you look to add after that. In this particular circumstance, we have two different battling things right now. We have a super hot sector. So let's add that piece to the equation right now. We have a hot sector and we have a strong stock. So in that sense, we actually have two pieces of the equation on our side. The challenge right now is the market's going down. So this is sector specific with a breakout. Now, the part that I want you to get across here, and again, I really hope you do this, the part that you need to work on, if you're good at taking your losses and you don't hold big losing trades, you need to start to build a system, which we call profit maximizer, of when and how to hold your winning trades, and you need to stick to it. There's going to be some times where you're going to be afraid. You're going to be like, oh man, I'm up $2,000 on this thing, and I need to book this profit because I'm afraid it's going to be taken away. Now, if we'll talk about the trading books. Jesse Livermore said most traders do the opposite, where they are fearful of their profits being taken away and hopeful that their losses come back. That's the way most traders incorrectly think. Most people in the stock market need to reverse that, where you should be fearful that your losses get bigger and get out of them, and hopeful that your gains increase. So you need to have the guts and the structure, which means you need a profit maximizer like we have in our Discord community to hold those winners. So I'm going to say this as super clear as possible right now. And I hate to use the word secret, but it's absolutely, in my humble opinion, the secret to profitable trading is understanding how and when to hold your winning trades longer. If you understand stop loss, which everybody can, you're like, boom, I get in there, there's my stop, I'm done, I'm out, put it in the system, I'm done. The challenge with profitable trades, like we just talked about here in EQT, is if this thing actually starts to rally, gets up to that level that we're looking at and hits that 60, we now need to have the guts. We need to now have the system to say, okay, it's performing exactly as I wanted it to. Now I need to hold this to see how much is left. Now, I want to make the distinction because a lot of people are, they hear like one little part of this and not the whole thing. I'm very, very deliberate when I say initial profit target. So in this case here in EQT, when we're talking about 60 being the initial profit target, that's just the risk I am willing to, that's the initial profit that I'm willing to have a probability of achieving in exchange for the risk. So in other words, I'm willing to risk $3 because I think that 60 has a pretty good chance of being hit. That's just the initial risk reward. That's really the way I want to explain it, okay? That does not mean I am limiting the trade only to that level. Now, we have a lot of members of our community, Jason Santoro and Andrew and a couple of other people actually have questions on our coaching session, which we're having tonight, about, am I setting up good trades? And there's so many times in the coaching where I'm reversing the question, where it's not a matter of whether or not that was a good trade or not. Most of the time, members of our community can put on a good trade. Those aren't the ones you should be hyper focused on, the ones you got stopped out on. What you should be hyper focused on is the good trade that you got out of too soon. Now, if you got out of good trades too soon, it only means two things. You're afraid the profit is going to go away, or, and maybe both. Number two is you don't have a system to hold good trades longer. We all have systems for stop losses, like bam, there's the number, we're out, and you go to the next trade. You need to build a system like we have, the profit maximizer, that tells you, okay, it hit our target. Now we're going to see how much more we can get on that trade. You need to work on that. So EQT is the first idea. So that's the first buying opportunity. If we zoom out here again to the daily chart, you can see where we are right now. So in this particular case, I want to be clear. If it breaks out and closes above $50, that's the whole key right now, then from that level, I'm willing to risk $3.33, looking for it to hit 60. Okay, that's the level on the first trade. Okay, the next trade we're looking at on the buying opportunity is CF. Okay, CF. Now, the big interesting thing here about CF, you can clearly see that CF has exploded 1, 2, 3, 4, 5, 6, right? 6 days, right? Now, here's a big problem. I don't want to keep saying problem. Here's a challenge. Here's something you need to work on, right? There's great ideas and they hit your scanner and you can't wait to get in there and be a buyer of those, right? You need to determine what we call the average true move. How much has that stock recently moved compared to what it normally does? So what ends up happening, and I love doing this visual because it really kind of simple to understand. If this is what the stock normally does, so let's use CF as an example, but now it's gone this far. Now, you're in your mind, you're saying, well, the stock's absolutely a buy because it just exploded the last 5 days. Even on a day that the market got pounded, this stock was still strong, closed above the opening price, closed positive, right? I know it's down a little bit this morning, but that's actually a big part of what we're talking about. So in your mind, you're like, this is an amazing buying opportunity. It was strong. It stayed strong. I'm going to get in there and buy it. But think about what we said. If this is what it normally does for the initial move, remember, we're not limiting the profits, and it's already done that. There's not a lot of profit potential there. So we need to expand the distance between your entry and the expected profit potential. So this trade in CF, I want to be clear about this. We're looking for it to pull back to this breakout area. So right now it's around 116.75. So I want to see this pull back between 110 and 112 before I put the next trade on. If it pulls back between 110 and 112 from that area, down, let's just say 112 as an example. This stock normally moves between $12 and $15. So if I can buy it at 112 and it normally moves 12 to 15, that means I'm looking at from 112 up to 124 as the next trade. So I want it to pull back so I have sufficient reward potential for the risk. So CF, I'm looking for it to pull back to that 110 to 112 level. Let me just take a look at that chart again. And what's interesting about this as well is we're talking about the groups of stocks, again, basic materials. So if we hop on over there and move over to the top of the list, you can see that CF, Alcoa, this is the list of stocks in basic materials that will be in my watch list, okay? So those are two of the ideas that I'm watching right now. The third idea is one that we actually called out on the same level that we're going to talk about it today, had pretty good earnings, kind of danced around the level, exploded up, and now is pulled back to that same breakout level. So we're going to take a look at that right now, and it's actually McDonald's. So we're going to take a look over here, and I'm going to show you the level. So we actually broke out here. This is actually where we're looking at. You can see where the earnings came in. We were watching it here again, not really rocket science. We're like, okay, 255 is a big level. Couldn't get through, couldn't get through, couldn't get through. If it gets above 255, we like it. And what's kind of cool about this is it actually exploded and pulled back and held that level again almost perfectly. So now I'm talking to you. I'm talking to you personally. Let me use somebody here as an example. Let's say Matus. I hope I say your name right, Curlin and Matus. So, okay. So, and by the way, average true move is not the average true range. I just want to be clear about that. Thank you for answering that question. Stock trading can be as beautiful and fun as you make it. And that's kind of what I hope I'm doing for everybody here. You don't need it to be complicated. You need to know when you're looking at a chart, where did buyers or sellers do something significant? And in this case here in McDonald's, if you go back to a bunch of videos that we've done in the past, we've been talking about McDonald's at 255. It couldn't get through it, couldn't get through it, couldn't get through it. Finally got through it and then pulled back. And you're going to see exactly what McDonald's did. It's the same kind of setup that we're looking for that I just talked about in CF. So McDonald's actually broke out after earnings and pulled back. Look at how beautiful that is for this move from 255 up to roughly 268. So a $13 move off of nothing more than being patient to wait to get your price. Now, what's kind of interesting is obviously Friday was a very, very heavy day of selling. But if you've been a regular viewer of our channel, and you know that I constantly talk about this because it's the number one thing that I do and what I'm known for, which is order flow stacking. And you want to have multiple reasons to take risk. You want to have multiple reasons to accept. I think it's going to go up because of this and because of this and because of this. When you learn to stack that order flow, you now increase your conviction. So when you hit that buy button, you're like, okay, if this is a profitable trade, I did my homework. If I hit the buy button and it doesn't work out perfectly, you still are good because you did the work and said, this is a valid idea, whether it follows through or not. And that's a big part of trading. So in this case here, Friday was a big day of selling, but we have a little bit of a stacked argument that we can put in here because there's two significant levels here in McDonald's. Not only do we have this 255 level, which is significant, but now we're seeing the 50-period moving average floating up to exactly that perfect spot. Now you can see it's actually set to open up right around 255. So this is going to be super interesting in McDonald's today. It's opening up smack dab right at that level. Now with the market trading really heavy pre-market as of right now, we're looking for it to actually push down a little bit further, maybe even get down to that 254 level. If it does and then reverses and closes back above 255, now we know what the trade is. The minimum initial profit target is going to be from 255 back up to this 268 level. So roughly a $13 profit target on McDonald's if it holds and gets back above that 255 level. Okay. Now we're going to flip the script and we're going to go to the other side of the market and we're going to take a look at sector rotation and which part of the stock market is showing bearish order flow and which stocks can we look at. Now, this is the part that I want you to screenshot. And I'm going to give you a little bit of a story about this. Now, remember, this is private stuff. Keep this between us. This is stuff that I only have inside of my community. Is we start to break this down a little bit further. And we have what we call, this is kind of the secret thing here, sheet 15. Now, what's interesting is you can see the size of the list of the stocks that have bullish order flow and what we call harmony. So there's a big list of stocks that meet the minimum criteria, but then the super strict criteria is here. This is the list of stocks. Now, last week, this list of stocks only had 4 or 5 stocks, and you can see this list is starting to now expand. So what we're going to talk about now are 2 stocks that again, these are stocks that I like for this week, short selling opportunities where I believe these stocks are going to continue further down between Monday and Friday. Okay. The first stock we're going to look at is definitely one that you're aware of, which had really big news last week, which was earnings and Nvidia. Nvidia had earnings, and to everybody's surprise, after earnings came out, let me actually pull this up on a 15-minute chart. This move kind of shocked everybody. The earnings were lowered expectation, lowered guidance. They beat it and then had a $10 rally off of the low. And now you can see this, what the stock did the very next day. Not only did it give back what it did on Friday, but it gave back, oh gosh, another $7.50 on top of that and down a little bit more this morning. So what we need to do now is determine what would be the next level that we'd be looking for, which is down in this area over here, where if it does push to the downside, we're looking at in the low 140s, somewhere between 140 and 145 is our downside target. So the couple of different ways of trading this, if you understand short selling, on the short side, I typically am much more conscious of working my positions where I do it in pieces as opposed to getting in with one big initial position. So we're looking for now Nvidia to hold the lower open and slowly trade down to that 145-ish level, which is roughly around $14 or $15 here. And you can see that all of last week, and actually over the last week or so, it's been holding this big key 50-period moving average. And Friday, it just absolutely obliterated it. And we're looking for this push down here into around 145. So that's the first stock on the short side of the market. Remember, this is just this week. This is not a long-term anything. We're talking about between Monday and Friday, okay? So if we know, actually, let's add that into the equation now. If we know that we're looking basically around 159 down to 145, we're essentially talking about a $14 risk. $14, that's the initial profit target. Remember, initial profit target. How much risk is textbook, so to speak, if we are looking to make a gain of roughly $14? Well, that's going to mean roughly around a $3.50 risk on this trade. So let's actually map that out. Let's actually do that on a calculator. Let me bring that into the equation. So if we're looking at a $14 profit target and we divide that by 3, so we're looking at roughly $4.66 on the risk on this trade. So now what's kind of fun about that now is now you have options in not options contracts, options for how you want to enter this trade. If we know that our risk on this is roughly $4.60 for that potential profit, now we can look to either enter it a half hour after the market opens and define our risk. We could enter that at the end of the day, depending on the market risk. We could enter it on an hourly candlestick if you happen to be involved in the market during the day. Whatever you set up to have that $4.66 risk on the trade, that will define your entry, that will define your stop loss and the share size in exchange for that bigger move to the downsides. But the way I do it, I'm not going to take that whole risk in one piece. I'll probably work the position in at least 2 pieces as it moves down, because I want feedback, especially on the short side of the market. And it's not a cheap stock. $159 is not cheap. So I want to make sure that I get feedback before I start to put more shares out there on the short side. So that's Nvidia. The last one that we're looking at on the short side of the market, which is now this is the third stock, is Zoom. And Zoom just got absolutely crushed here coming in off of earnings. But this is the big level we're looking at right now. You could see that we couldn't get below that level, couldn't get below that level. Now let's actually go out to the longer term charts. And you can see that we're not that far from all-time lows in the stock, which is around $61. So if we kind of zoom this out a little bit further, and you can see where we're looking at, this has roughly $20 down to the all-time lows. Now, what's interesting about this one, and this one really excites me, is you can see that we're actually now in a 4-day trading range after earnings. So if you follow a lot of what we do is the push and the pause. The pause is where we manage risk. The push is where we make money. So if we look at Zoom right now, after earnings, it had this giant move to the downside, which is known as a bearish gap, which is this move from here to here. And you can see earnings came out here. But now we've paused for 4 days. So now we have some pretty defined risk here between 80 and 86, basically. That's a pretty big window. $6 might seem like a lot of risk on a short sale in Zoom, but we just talked about the next significant support level on the way down is $60, which is almost $20 away from where it is right now. So 20 divided by $6 risk, that's still a 3-to-1 risk reward. So it kind of still matches the criteria for a new potential short sale in Zoom. So we just want to work our way over just a little bit more here to give you some more ideas. I want you to screenshot this just so you have some ideas heading into the day. Like I said, I don't normally share this publicly. This is for our community behind the scenes in our boot camp and in our Discord community. Our next boot camp actually starts next week. If you want to learn about the boot camp, I'll leave a link below the video. You can check it out. I hope to see you on the other side of that. But I want to show you the other ideas. Okay, so the other ideas, if you want to pull a list out, this list right here of stocks that are short sale opportunities, and we'll actually take a look at NVAX and Twilio because they're both actually down there as well, right on the bubble of potentially breaking down. You can see NVAX now, look, that needs to get below this 35-ish level. We're actually kind of below there already, and Twilio kind of doing the same thing. If we zoom this guy out even further, you can see that it's not that far. The next level is all the way down here in the mid-20s. This thing could fall off a cliff. Maybe some minor support here in the 70s, but that's kind of right where we are right now. So we got some room to the downside. So what's super interesting about this, and I really want to just kind of like bring this back for everybody. What we just talked about is setting up trades from the start to the finish, why we like the trades in the first place. But I think the most important part is we also mapped out the risk reward and the trade management. So the whole trade on all 5 of those stock picks, it's mapped out from start to finish. So there's really no guessing. There's no stress. There's no, oh gosh, I'm going crazy on this thing. We already accepted the risk before the trade, assuming that those dollar amounts are okay with you. We talked about the breakout in EQT and what the target was. We made a definition of initial target versus average true move. We also talked about profit maximizer, that if it hits our initial target for profits, then we use what we call the profit maximizer to see how much more can we possibly get on that trade. So remember, what I want to walk you through just this one time, because it's super important. There's initial risk and your expected initial target to accept that risk. So that's the first part of the trade. Once you're good on that, if it hits your target, you also need to have in place a method to hold winning trades longer. So in my opinion, the key to the stock market is not risk. You have to first understand and accept risk, but you can do that in a heartbeat. Once you understand how to accept risk and you actually get out where you're supposed to, a lot of people don't do that, then the real skill in making money is what we walk through here, is setting this up every single day, is understanding stocks and how they're trading in order flow and following stocks from day to day with sector rotation. And we had somebody in our community say beautifully the other day, basically, that it's much easier to trade when you're simply following the money as opposed to hoping the money follows you. It's just 10 times easier. Like, oh, there it is. It's obvious. Let me catch the train going in that direction and then just manage the risk. That's the easiest way to trade and probably the quickest way to get profitable. So hopefully everybody got a great ideas today. We put 5 of them out there, 3 on the long side, 2 on the short side. If you want to learn more about what we do and you want to get my picks and my research and everything every night, and you want to trade with me for a couple of weeks, click that link below the video. Check out the bootcamp. Maybe you'll find it's something that you like. If we did a good job for you today, please do me a favor. Give us a thumbs up. Hit that subscribe button. Have an awesome day trading. Futures are down a little bit today. Have a good game plan for the week. You just got the top 5 picks that I'm looking at. Thank you so much. Take care now, everybody.